Good afternoon and welcome to the panel discussion on MSME and markets at the India Economic Forum and LITFest. Our panelists for this afternoon are as follows. We're joined by Mr. Ajay Thakur, Head of SMEs and Startups at the Bombay Stock Exchange, where he's responsible for the development of this segment of BSE Limited. He has very successfully launched the SME platform on 13th March 2012, and it in fact became the first exchange to launch the platform. He joined the Bombay Stock Exchange in 1996 as Head of Arbitration and Business Development. Tanvi T. Auti is Managing Director of Group Consultancy Service, where she leads operations, finance, and business development verticals. She has wide experience of handling projects like financial management policies and incorporating in emerging technologies as crucial measures being implemented under her direction. Kamya Chandra, who serves as a fellow at ICEPERT, is interested in building public digital infrastructure to drive the radical growth of MSMEs. She was previously the skilling and entrepreneurship lead at Step Foundation, where she helped the Ministry of Skill Development adopt a strategy on digital credentialing and publishing open digital registries. She's also previously worked for the World Bank Identification for Development ID4D program team in Washington. Dr. Dipali Pant Joshi, Distinguished Fellow SKOCH and former Executive Director RBI, is a development economist who served the RBI for 36 years. She was closely associated with policy formulation in the area of rural credit. She was elevated as Executive Director in 2013. She's passionate about the need for strengthening grassroots level institutions and issues of equity and gender. Rohit Vaswani, member, Advisory Board, BVSS, is a practicing chartered accountant since 1998 in the area of indirect taxes. He has served as a member of several committees and also serves on the board of the Bharatiya Vidya Salakar Samiti. Mr. Saurabh Sinha, Managing Director of Brainium Information Technologies, is an entrepreneur passionate about aiding budding entrepreneurs and enterprises in their digital growth journey. He founded Brainium in 2009, which offers end-to-end solutions within the digital ecosystem. I would now like to invite Sri Samir Kochar, Chairman SKOCH Group, to deliver the opening remarks for the panel on MSME in markets.
Namaskar. MSMEs and farmers are two constituencies that every successive government, every political party plays a lot of lip service to. And all of them build policies that have got inbuilt points of failures. Like any other economy in the world, Indian economy is not in the pink of health. Some people say that we are going fastest, but this growth is unevenly distributed. It's concentrated at the top. It's the bottom people who are, going negative drastically, and the top is going positive phenomenally. So given that, what is it that the MSME situation looks like today? The situation becomes worse in view of the crisis that is going on in Ukraine. You see supply chains are being broken again. We saw that in COVID. And suddenly you find that even small things like pins and plumbing that India could very easily manufacture in country, over the years that capacity has been lost and everything is import dependent. On the other hand, you would have opposition to opening up of the markets, MSMEs, tying up or, putting protectionist measures like dumping duties and so on and so forth. The only thing that you find when that happens is that the local manufacturers of raw materials make their stuff prohibitively expensive, the raw materials prohibitively expensive for MSMEs. So one form of exploitation is replaced by a second form of exploitation. And I'm sorry to say, when Indian companies exploit Indians, it's far worse than when MNCs exploit Indians. So that's a huge problem. So if you look at a day in an MSME's life, all we are saying is that, we don't want your any support. We don't want any dole. All we want, is ease of doing business, right? And the problem statement there starts with availability of credit. Dipali Pant Joshi ji will talk about that. So what we will do is we'll start with framing the statement, how the market, the government and the policy has incredibly failed in provision of even credit. Now, there are 4 possible sources where you can get this credit. You can get it from banks, They have failed MSMEs in that. They have, second source, of course, is markets, where the penetration is extremely shallow. There's a lot more to be done. So wherever markets have intervened and MSMEs have listed, perhaps there are success stories, but then there are too few. The third could be bill discounting systems like TREDS, what's going on there. And the fourth system could be the NBFCs. But by and large, you realize that none of this is working or delivering optimally. So what we're going to do is we're going to have this session in 4 parts. In 3 parts. The first part is framing the problem statement. So where are the gaps? When we say economy and MSMEs, what is it that is missing? Part 2 of the discussion would get into what could be the possible solutions. What is it that is possible? What is it that can be done? What will be done? So on and so forth. And the part 3 finally is hopefully we'll try and return some recommendations to all the stakeholders, be it the government, be it the RBI, be it the market regulator, and tell them that these are the 5 things or 6 things that you can do without, taxing yourself too much. I mean, including things like get out of our hair. We don't want anything, but just let us be. So with that, we start this discussion. And to start with, I call Dipali ji to talk about how the banking system has systemically let MSMEs down and made them entirely crippled. Your sound is mute, Dipali ji.
Can you hear me?
Yes, we can hear you.
All right. So you mentioned the impact of the Russo-Ukraine conflict, and this is going to hit the MSMEs very hard because the Indian exporters who are shipping goods to the region are going to face and are facing delay in shipments, late payments, damage to consignments. We export a lot of pharma, machinery, apparels, auto components, and electronic medicine. So 12% of India's overall exports is pharma. All this is going to be being done through the MSMEs. All this is getting blocked. So, and because they are not in part of the SWIFT anymore because of the sanctions, whatever shipments have already gone, and those which are mid-sea, and they're looking now only the South China Sea seems to be the alternate trade route. And whatever money for those shipments is gone is already blocked because of the sanctions on SWIFT. And now after this, I'm going to request Stephen to just show 2 slides as you requested, showing the credit gaps. Of course, the banks have failed. The RBI has become like a preacher because it keeps preaching and it keeps saying that you must extend credit to the MSMEs who are very important for employment and who are very important for economic growth, and no credit flows to them. So Stephen, if you could please show the slide on credit gap. So, on credit gap, Stephen, please. Yeah, so here you are. Here is, so I say mind the gap. So officially 6.5 crore MSMEs are registered. Officially only 1.5 crore access bank credit. Why? Because bank credit equals collateral-based lending, and we'll be discussing the alternatives and the problems thereof later in the seminar. That is the cash flow lending and the movable asset lending. Could you show of the 1.5? Okay, can you please show the slide on lending by banks of the last 2 years from the RBI statistics? Stephen, please, the other 2. Yeah, so you can see from this, and there's another slide also, Stephen. Even the official statistics seem to show very marginal increase between the years 19 and 20. A lot of the credit flowing to the micro enterprises now, partly because of the 7.5% PSL gain, and partly is everything from Kirana to sub suppliers, everything seems to be clubbed under micro. So there's no credit which is actually being flowing to the medium enterprises, forgetting that it is the medium enterprises who are going to buy from the micro enterprises. The banks are paranoid with the fear of NPAs. Lending is completely paralyzed because of the collateral obsession. And this despite the universal argument that MSMEs create more employment per capita of capital employed. Their decentralized evens out development, and they use the latent resources, but there seems to be a double whammy hitting them. There is a demand compression. This happened post-COVID. This has happened now. The measures post-COVID were entirely cosmetic and did not work. You had a 3 lakh crore ECLGS, which is catered to 19% of demand, was applicable only to existing loans, which meant that 20% of your outstanding would be waived off. There was a fund of funds, which remains as mythical as the name. There was a subordinated debt scheme for which 20,000 crore was allocated, and it did not come through. The change in definition to turnover, well, you can view it as a positive, but as far as the MSMEs are concerned, it's still the lack of credit stupid, and we are not going to go anywhere till credit flows from the banks, and there is cheaper credit, and the irony of it is that the banks are flush with funds. So I'll stop there on the first part, and on the second part, I will come to the second and third parts. I will speak of the interim solutions and other things, and then the recommendations. So I'll stop here.
Yeah, thank you, Dipali ji. And as you said rightly, that the policy action has been only preach and nothing beyond that. In fact, yesterday we had a panel discussion similarly where one of the speakers, and I quote, has lost all credibility. They have become like another government department, and they have to seriously work on their credibility and bring it back up. And panel after panel, we are hearing this. This is, of course, not SKOCH view, but if RBI is listening, RBI should find that in India Economic Forum, where 64 topmost economists of India's are talking, there seems to be a general perception that RBI has got very low credibility, and that's somewhere they need to.
The problem does not lie at the end of the RBI. The RBI has done a survey. The RBI has found that credit is not flowing. It has set up n number of expert committees, which have been happening since I was there. The problem is that the MSMEs belong mostly to the PS, go to the public sector banks. The public sector banks are creatures of the government, and they know which side the bread is buttered. So as long as the NPA is a specter, you see, it has to be responsive finance and responsible borrowing also, because the money has to come back. So I don't blame the RBI entirely, but yes, RBI does seem to be losing a bit of its teeth as far as the banks are concerned, which is not a very hot thing to happen for any central bank.
Right. So with that, I move on to Mr. Rohit Vaswani, who's also associated with Bharatiya Vitti Salahkar Samiti. He's a practicing chartered accountant. He's been associated with us for years, including a lot of MSME surveys that we had done during COVID. So Rohit ji, what's your perspective? Who's failing? Or is everyone doing a good job and we live happily ever after?
Amirji, first of all, I congratulate you for hosting these topics, and it is very near to us. And since here we are discussing the issues related to the MSME, their funding, their compliances, ease of doing business, and many more. And I think if you ask me really, if something has happened, yes, something has happened. It is not the same situation which was there earlier before 5 years or 10 years, but it is not sufficient what has been done. It is, something very, peanuts like situation is there. Very small change we are seeing. The issue is that I take it in two different angles. One is regarding the, capacity building of MSME and the, knowledge base, working of the MSME. MSME is supposed to be, we say it as a one-man show, or we can say it's a family business, or we see that in MSME also the micro is the largest in number. So micro, small and medium, if you see, it is on the bottom of the country. And this is also truth which is being recognized across all the stakeholders. Yes, they are generating employment. They are not asking anything from the government, but they are contributing in the GDP of the government in indirect ways. Now, if they are contributing, if there is a employment in country, if the cost of the product being generated by the MSME is far below than the cost of the products which is marketed by the formal sector, and blah blah blah, then what the requirement of these MSME is. If we see that formal financing methods which are there, both ways we are making our decisions. Either it is a balance sheet based funding, then what happens, you are scrutinizing all the documents, financial, and really if you ask me, if you talk about the stock listing for the MSME, and there is a special category for that, so it is once only dream for a MSME to be get listed on the stock exchange, even now when we have the specific platform also. The reason is that if you ask them so much of the papers or the balance sheet or the ratio analysis or the valuations or the things, then it is not going to solve the problem. I give you a small example. Rather than taking the funding for cash credit or the OD limit, they are preferring to have the loan against property, because in loan against property the documentation is minimal. So you can see they are happy in paying higher rate of interest. They are happy in taking the lower amount availability based on the valuation of the property. Whereas in case of the cash credit or the MSME funding, this property value can be much lower than the actual facility which can be given by the financial institution. But in case of the loan against property, it is very, amount is very low in that comparison. The point is that if you are relying on the papers, then we need to have the knowledge base capacity. We need to create the infrastructure. We need to have the capacity building, and there is a cost associated to it. And fact is that the cost associated and the type of compliances required for that are not up to the mark as of now, so far as the Indian MSME is concerned. Secondly, if you are saying we will go funding like based on the GST turnover only, GST is another angle. I am not going on the other bottlenecks of the GST implementation or the MSME which they are facing in implementation of the GST. But when you are saying we are funding based on the GST turnover, what is happening? They are asking the paper-based due diligence also, and in addition, they are adding the GST as a funding. So this is, both ways the MSME is being crushed. It should be like you can have a scheme if you are registered MSME, although we are not on the solution part. But I am saying if you are relying on the credential, relying on the credit rating, relying on the CIBIL, relying on the GST, go for that. And rather than on the balance sheet like things. So this is something initially which I think it's proper to highlight here in this discussion.
Thank you, Rohit. You brought out the double whammy of the compliance burden and then lack of access to markets and finance both by MSMEs, and that does remain a formidable challenge. Dipalaji talked about how banking system has failed, and Rohit talked about how policies and compliance burden itself, with policies with inbuilt points of failures, are letting MSMEs down. So I'll move on to Ajay. Ajay ji, so what is the problem with the markets, and is there a problem statement? Is the situation perfect at the markets end for MSMEs, or there are some residual issues that need to be addressed? I mean, obviously, if it was perfect, then there would be far more MSMEs listed.
If you see the issues are already there. We are very much informal economy. We are not a formal economy. 94% of the MSMEs are macro enterprises, and after that, almost 3 to 4% you can say that they are a small enterprises, and another 1.5% is medium enterprises. Now the problem is that when it comes to informal sector, it becomes very difficult for the banks or the NBFC to fund these companies. Though we are seeing digital finance coming inside and they are doing macro financing. But when it comes to balance sheet or PL account, these things becomes very much, difficult for these macro enterprises to maintain and present to the, funding institutions. So those difficulties are there. But more than that, even those small and medium enterprises who have access to debt finance, it has been found that they have over-leveraged their balance sheet. They have taken lot of loans, and most of the time, servicing the loans become very difficult. And that's why 10 years back, we have started this SME platform, whereby we have requested the small and medium enterprises, even having a turnover of 5 crores or up to 600 crores, to come and get listed. And as far as the compliances are concerned, on which always the stress is being given, that how to reduce the compliances for the small and medium enterprises. Let me tell you, from day one, the emphasis on the SME platform was the same, that we should reduce the compliance burden on a small and medium enterprises which are coming for listing. So we have reduced the eligibility criteria for listing also to minimal. Say, for example, today we are saying that if you have 3 years of track record with 1 year of operating profit and 1.5 crore of net tangible asset, you are eligible to get listed. And the post-listing compliances also we have brought it to minimal. Having said that, of course, when you see the larger ambit of micro, small, and medium enterprises, I think that the credit cap is already there. There is always a hue and cry of financing to these micro, small, and medium enterprises, especially in the COVID area, where the contact-based economy has suffered like anything, especially into the hospitality sector and tourism sector, which creates a lot of employment. So I think a lot of things need to be done on the ground. Policies are there, but we need to implement these policies very fast. We need to ensure that the financing should reach to the last mile. And at the same time, there is a requirement to do a lot of handholding. For example, a big problem that I have seen, that post, this Udyam registration, out of 70 million macro, small, and medium enterprises, only 59 lakh or so has got Udyam registration. And there are a lot of benefits to Udyam registration. But still, this number is minuscule. And out of this 59 lakh also, almost 52 lakh are macro enterprises, almost another, 4 to 6, around 3 to 4% are small, enterprises, and 1.6% is, medium enterprises. So it means that the information asymmetry is not there. Information is not reaching to these enterprises, though we are talking at every forum. But I think on the ground, still things are not happening. The way we have seen in the when Jan Dhan Yojana was implemented, we have seen the bank officers going on to the ground, opening the bank account for everyone, and that's why we are seeing fund transfer to these people at the time of COVID. If the same thing can happen in the case of macro, small, and medium enterprise, where all the informations are there, where we know these businesses, even there should be the consultants, the advisor, and the officials or the bank officers who should reach to them, help them in preparing the documents and papers, and bank financing should, or any sort of financing should reach to them. I think these areas need to be stressed upon. These areas need to be covered upon.
Okay, so what Ajay is telling us is that information, communication, education are the three big gaps. While markets may offer some fantastic solutions, people don't know about it. Now, for people to get to know about it and for people to reach, it's not self-evident. Someone has to do the difficult job of mobilizing, training, teaching, talking, communicating. Now, here there has been a huge regulatory failure. Over the past 4 or 5 years, we find that SEBI, which is the regulator, has almost entirely taken over the investor protection funds, financial literacy funds, as much as even marketing funds. They want to micromanage where this money is spent and by who. So if you want to train 50 people on financial literacy, the rate that SEBI offers you to do that is 5,000 rupees. Now figure that and tell me, how would anyone train 50 rural women in 5,000 rupees? And that's a question that they repeatedly refuse to answer. But when it comes to squandering money, they end up squandering a lot of money. On the other hand, if you look at small businessmen like Saurav, who's here from Brainium IT, he may find that markets is a very good solution to him. But today is the first time he's hearing about it. So Saurav, will you tell me what the problem is?
Yeah, good afternoon, Samirji, and thank you for arranging this forum. It's a pleasure to be part of this distinguished panel at India Economic Forum. And you are right in the sense that for the last 3-4 years, and right through the COVID times, we have found that getting capital is very difficult. Means there are two ways of raising it, right? One is like debt financing or through equity financing. Now, when it comes to debt financing, we being a very service-oriented company, and not that much asset rich, we are not able to raise funds from the banks. And we have reached out to private players. It's not that we have gone out to the SBIs or the government banks, but they do not, even our OD limit has not increased over the last 3.5 years. It has remained the same. So they are always looking for some collaterals, which some distinguished guests of yours have already pointed out. And when it comes to equity financing, now we know that all these talks of unicorns and private equity players, now these people are funding those companies which are mainly product oriented, or it is a kind of a bubble wherein you get a lot of users, even if it's a loss-making company, they keep on pumping the funds. And we do not get it, right? And because of this kind of bigger players, our expenses, a company like us, where 70% of the expenses are on the engineers' salaries, it has gone like double and triple over the last 1.5 years. Because people are getting those opportunities, they are jumping companies, that's number one. Number two, because of no geographical restraint, you can hire people across the board, like the company is in Bangalore, but the person is working from Kolkata. So they are getting a lot of opportunities. So only way to fight is by getting finance and increase the capital. But we have found that from the banks, we can't get it. So the only way possible was through the market. And frankly speaking, we were not aware. Even till yesterday, I was not that much aware, because I have not seen that kind of advertisements. We see a lot of advertisements on mutual fund investing and retail stock investing, but we have never seen any advertising from the SEBI or SME boards where they are giving trainings to the founders about how to list in this SME board. So I guess one of the things, the problem is that we are not spending the funds from the SEBI or the government side on training these people. You just now rightly said that with 5,000 rupees, how are you going to train it? But with this digital platforms that we have, I think trainings can be provided. There could be a lot of seminars where people like us, means we are always online, but still we do not know that much, because we are very much dependent on our CAs and the finance team. And probably they have been always telling us that there will be a lot of regulatory pressures, there we have to work on a lot of paperwork. So it's better you remain.
I'll cut you there. So, had you known that markets was an option, you would have gone for it, but you don't know about it. So exactly. Moving on to Tanvi ji, you have recently gone to market, or you accessed market, but what was the problem before you accessed, and how did you get to the market? Who told you to go there?
Yes, thank you, Mr. Kochar. So I would tell that we are an infrastructure consultancy firm based in Mumbai. So we have seen over the recent years that government has given maximum budget allocation to the infrastructure sector. 6 lakh crores of investment has been done, and there is such a big opportunity for us to grow. But due to lack of funding and the capital that we require for an infrastructure project, the growth was restricted. So we saw that during the lockdown, government did give us some pump under the Atmanirbhar Bharat, but still the liquidity problem is still there. Now, when we go to bankers, as Sauravji also rightly said, that collateral becomes a big problem. Bankers always fear that MSMEs will be able to repay the loan or not. So they always start implementing stricter policies or stricter regulations for MSMEs. And due to absence of collateral, an MSME is not able to take the credit. So the problems that we faced first is statutory compliances. GST was introduced and this increased the compliances for us. So when you're forming a company, the company formation rules are same for an MSME, also for a company like Reliance and Infosys. So these regulations are there for which every MSME does fear for those compliances. Secondly, bank guarantees. As an infrastructure consultancy firm working for the government, we need to give bank guarantees. Now, MSME Act does say that MSMEs are exempted from bank guarantees, but even till today we are being asked to submit performance security or security deposit or EMDs. So there is no exemption implemented at the ground level, and there is no uniform policy when it comes to states. Center does have uniform policies for MSMEs, but while it comes to implementation with state governments, there is a problem. There should be a uniformity, or some leverage should be given if you are registered as an MSME. So there should be less compliances because an MSME is has only fear of compliances and the regulatory bodies. So if some leverage can be given there, then MSMEs can raise capital.
Thank you very much. Those are wonderful points.
Yeah.
Also, the point that you made that there is the same policy for large company and same for MSME. But the fact is there may be 100 odd large companies and everybody else is an MSME.
Yes.
So what happens is that they will, regulate for 100 and then say that from Parchun wala to Kirana wala to somebody who's got a 400 crore turnover, same law applies. How is that even possible? I mean, it's laughable.
Yes.
Laughable in a country like India with so much of disparity. I don't know what Ministry of MSME is doing except making ill-founded policy interventions, like saying Zoho is standardized or buy Zoho. And so, you create an Indian monopoly. And Mr. Sridhar Vembu, who's like a poster boy of Indian technology, increases his rates for MSMEs by 25% just because that market is in his pocket. So how would this exploitation end? So these are also challenges, and ill-founded policy interventions like such as MSME ministry deciding which technology you could buy and at what rate are totally avoidable.
Yes.
Coming to the last point of market-based financing for MSMEs. So, we've understood where the problem in banking is, we've understood where the problem with compliance is, where policy is, and where markets are. Kamya, you've been trying to give alternative solutions through trades or, a second window through trades for a while, which, sound to be like a no-brainer from day one that you told me. And I've been speaking with you for 2 years now. Something which is such a no-brainer, where is it?
Yeah, so first of all, I think everyone on this panel has rightly pointed out the many, challenges that exist that MSMEs have to deal with in their everyday life. I think the first thing we should all try to do when approaching this problem is sort of elevate ourselves out of any individual role and look at the ecosystem and say which actor is incentivized to do what and solve for every player in the ecosystem. So for example, if a large bank is not offering a loan because they are only demanding collateral, then look for a way that, or a type of loan product that might work for that bank to offer maybe a smaller ticket, smaller sized, lower risk loan, which can still be profitable and solve for their needs, right? So as Ms. Pant had said at the beginning, India doesn't have a shortage of liquidity. We have huge demands for credit and we have very high liquidity. Actually, reverse repo rates of the Reserve Bank are at a historic lows. So the banks are flush with liquidity. We have a distribution of credit problem. And what that means to me is that there are bottlenecks that the banks are facing in distributing this credit, and we have to try to solve for them. Now, one thing we've been trying to do, amidst the noise of bad policies, there are a few nuggets of useful sort of frameworks and policies. One of those is sort of the RBI account aggregator framework, for example, right? And what that will allow is it might allow an individual to share very easily the bank statement information from one place to a new lender at low cost with high trust, or their GST information or their GEM purchase order, right? Or any proof of a small ticket cash flow that's coming in the future, that once shared with security, the bank can trust that as a source and therefore, provide a small ticket, what we call cash flow based loan on that, right? And that's easier because it's difficult for a bank to authorize a 5-year working capital limit. You minimize the problem for them. You say, look, offer a 60-day loan for a smaller ticket size against a specific invoice, which is against a specific buyer whose GST information or number you might know, right? So there are many solutions out there. we do believe that any solution here will require not just government action, but a government enabling, but also for the market, financial institutions to sort of adopt it. So for example, for account aggregator, 16 financial institutions have already gone live on account aggregator, including the nation's largest private banks. And SBI is currently testing, for example, ICICI, Kotak, Axis. All these institutions are live and sharing data on this framework. RBI has created it. Now it's time for the market players to realize the infrastructure or digital investments they have to make to actually increase their MSME portfolio size and fulfill the promise of priority sector lending. So I think we've been trying to sort of institute the right platforms at a government level that need to then be adopted by different private players. And we have made some progress, but to be honest with you, Mr. Kochar, it's a hard problem. The Bank for International Settlements, has said that it's a global challenge to actually, offer credit without collateral for small businesses, right? This is not just an India problem. And honestly, India is starting to build a quite unique digital architecture to solve this problem, which is why I have a small ray of hope for the future, because with sort of a growth of systems like UPI, which are world first, right? With the creation of GSTN, which actually, let's say, I know it added a number of compliances, but it also removed the compliance that would have existed beforehand at the state income tax department, which was a complete mystery and would have had to be solved state by state for a pan-India company, right? So there is some progress in terms of the creation of the right digital architecture that will address the unit costs, for banks to actually try to solve this problem and NBFCs to actually try to solve this problem. And we have to continue to build at an ecosystem level.
Right. Thank you so much, Kamya. As you said that you see a small ray of hope. Well, actually, here we need an entire, nuclear reaction or sunburst.
Absolutely.
Kind of a thing. And, as they say, road to hell is paved with good intentions. And, intentions are very good. In fact, they're too good. And I'm therefore wondering whether we're going to reach heaven or hell. So moving back to Dipali ji. So Dipali ji, what can be done? Now we've all understood the magnitude of the problem. We've understood that policies are poorly constructed. We've understood that if somebody has a great solution like markets, there is no money. The regulator makes sure they don't spend any on preaching it. If we say that we are going to use Atmanirbhar software, you create India monopoly. Sort of, just before I do, how much has Zoho prices gone up in the past 2 years?
Zoho prices has gone up, especially in the last 1 year, it has gone up by 25%. Yeah, and every year they have been increased.
Right. And it kind of coincides with the time that MSME ministry said, adopt Zoho.
Absolutely. Absolutely.
Right. So, Mr. MSME ministry, if you tell the whole country buy Zoho, please also talk to Zoho and tell them to reduce by 75% and not increase by 25%.
Their customer service is also not that good. They will not respond.
Terrible. So they're becoming bad. And the reason why Zoho is coming up is that we don't have this problem with Tally. MSMEs depend only on 2 software packages. You talk about digital India, digitalization, infrastructure, blah, blah, blah. The only 2 things matter to MSMEs. One is Tally and the other is Zoho. And Tally is extremely supportive and Zoho is becoming exploitative. And that's the message we want to go back from this conference. So Dipali ji, from a banking system, what will it take to fix it?
Yeah, you see, from the banking system, as I mentioned, the RBI has been flailing around and with some degree of, I should say, success too, because there's an RBI expert committee on MSMEs, which has made a lot of recommendations. Now, those which have been accepted as viable solutions are a video KYC, B, a creation of a payments infrastructure development fund, which is going to give an impetus to acceptance infrastructure to promote direct payments and platforms for the new MSMEs, especially for the rural MSMEs. See, there's this co-lending model, which I find has a lot of promise with the NBFCs, the banks and the NBFCs. So one leverages on the reach of the other and so on. And then there is, of course, the threshold limit for the bank's retail portfolio has increased to 7.5 crore from 5 crore. Then, as your previous speaker just mentioned, technology is a great enabler. So there's been a lot of tech transformation and you can leverage digital platforms to assess the market risk. I mean, you have the GSTI number, you have the SIN number, and that you can go to the India stack, and that's all available on the India stack. You can look at the GST return, and as a multiplier of debt, you can leverage all this data and analytics to extend credit and debt. Now, another thing which the RBI had very hopefully done when I was there, and this was the year 2017, we had formulated the TREDS because it was the delayed receivables, which we thought are the major issue. And you can guess the major culprit. The major culprit is the dinosaur or the elephant in the room, which is none other than the Indian government. So TREDS is a good solution. It is catching on, but more PSUs must therefore come on board because it is the government payments and the PSU payments in particular, which are inhibiting the cash flows of the MSMEs. So it's a very simple system. You upload your invoices. There's an acceptance by the buyer and money comes in the next day. There's also talk of a public credit registry. Now, prior to this, the CGT SME had been tried, which on paper looks very good because it's a process of triangulation. The CGT becomes an intermediary and guarantees the loan, lending comfort to the lender and the borrower. It guarantees 75 to 80% of the loan. Now, this looks very seductive, but it is highly uneconomical because the premium which you have to pay is very high. And nobody is prepared to cough up that kind of money. So therefore, to make it more attractive, you must reduce the interest rates which are charged, and you must reduce the premium rates. You must beef up technology, and you must try to see that at least that which is the, as you say, that which is the due of the MSME, that which is Caesar's should go to Caesar's. So at least if the government is willing to funnel in just the money which it owes the MSMEs, believe me, infinity will be the opportunities for the MSME. I'll stop here because then I'll segue to my final recommendations and hear other speakers.
Yeah, fair enough. So moving on to Rohitji, she's again brought out, the elephant in the room, which is the government. And so you tell us, and why this CGT SME is not given to anyone?
Yes, major
you have to be related to the chairman of the bank to get CGT SME. That's what the joke goes.
Issues has been in the first part, as you suggested. The problem statement has been framed almost, and we are on the verge that we can straight away say that these are the issues, these are the problems. As I already mentioned, we have started moving forward, but the speed is very slow and the means are very limited. I would like to give you very practical, because we deal in we are in the surgery part. We do surgery every day with the MSMEs and all other clients, and we know where they are lacking. If you are having a Udyam or Udyog Aadhaar number like that registration, and you recognize them as a MSME, you have the due diligence, and you can have the visit also, verification also that they are doing the business. You can verify the factory also. I mean to say, you can enhance a level of Udyam registration, post registration verification also, if required in certain cases. But if the CIBIL is okay, you can go for straight away civil based funding, and it has been talked here. Another way, like registry thing has come out. If you are going for CIBIL based funding, if the repayment track is perfectly okay based on the repayment track of the previous years, so you can straight away go for CIBIL funding for the MSMEs, and don't ask for the papers or the reports or the stock statement or the debtors aging and all about balance sheet analysis, and go for the easy funding for the MSME. Now, GST has been much talked about. Some of the concern about the GST, although MSME, if there is an interstate supply of single rupee, the exemption of 20 lakhs or trader 40 lakh goes straight away. It means if I am in Delhi and supplying to Noida, I am mandatorily liable to get it registered under the GST. So why you want to get it involved in the small business in the GST trap? I'm using the word trap intentionally because the compliance nowadays under the GST becomes huge. So if you are giving the exemptions limit within the state, allow it to the interstate also. And if you want to give the GST based funding, if I have a turnover of 1 crore, my CIBIL is okay, go for 20 lakh crash credit limit straight away. Don't ask me the other documents if my credit, CIBIL track is okay. Based on the turnover, they are saying it, but it is not happening. If I have a 10 crore turnover, why can not I have a 1 crore CC limit straight away going to it? And further, there is a concept of Kisan credit card. The concept is that it has a limit fixed that you can anytime avail the limit for Kisan credit card. Like that, MSME credit card should be made by the ministry, and based on that limit, you may have 2-3 criteria. Any MSME can go for funding, whether it is in the term loan or the cash credit or in any other manner. You need to have an authority, you need to have a banking system where easily available credit is there for MSME. Don't look behind many papers about the MSME. If their track is okay, if their turnover is coming in the GST, if CIBIL is fine, go for funding. And you will see, if you analyze the NPA data, which I am not going, Sameerji, you know very well, the big fish, the shark are more active rather than the small. If you analyze the percentage of NP in this MSME, you will find that you have lost nothing, but you will see a revamp. You will see, the growth the India can achieve within few, years if you are allowing the free flow for the MSME. Secondly, financial capacity building has been talked about, and if you talk to me, if you want the financial capacity building, you want the listing, you want the documentation up to the mark. If any as MSME required a full-time chartered accountant with at least 2 supportive staff, the costing is around 1.5 lakh to 2 lakh per month. And this costing is required. I am saying this is required up to after an extent of level, and you must think about of a level to reach it out by the MSME from micro to small and small to medium, and then a financial capacity building model ecosystem should also be developed. The government should come into the intervention, like you gave an example regarding the 5,000 rupees for educating the 50 village women for like that. So this is required. And another point is the technologically capacity building. It is very much required, knowledge-based capacity, technology, and I endorse it. I recognize it that the government is doing in this area. And we are seeing the result also that, some type of technology capacity building, know-how, and knowledge-based capacity building is there. And it should be done, with more efforts and with more system, and we need to emphasize the modus operandi or the ecosystem to keep it financial, technological, and the funding, all this ecosystem available to the MSME, and you see how it grows. It is not going to harm you, but the financial system, but it is going to give you the type of growth which the country is looking for.
Thank you. You've given some fairly commonsensical answers, and I hope that this civil-based lending is something that they should have actually done through COVID itself. It would have solved so many problems instead of such a contorted policy that came out. EGLS, IGLS, I don't know what, so many syllables in the name that itself it will make it impossible to implement. So moving to Tanviji. Tanviji, you are a ray of hope in this very pessimistic room. You are one person who's faced these problems and you have kind of conquered them. Tell us that story. Tell us, inspire us as to what can be done and how.
Yes. So in 2016, when we were growing our turnover from 10 crores to 15 crores, suddenly there came a bunch of works, close to 30-35 works in 1 year, where we as an MSME were doing only 3 to 4 works in 1 year. Suddenly 30 works were awarded to us because of our strong technical team. But we did not have the capital to carry out these work. This is where BSE SME platform helped us. We got listed in May 2018.
Just explain me, how did that happen? How did you know that you can get listed at BSE SME?
We met.
When was the first time you heard about it?
Yeah, so actually, in market there is no story. There is nothing that you can. We did not hear it from the market itself, but we met someone, Mr. Clifton D Silva. We just met him at the right time through a broker.
He working for BSE or
Broker.
he's someone else?
No, he's just a moderator. So he helps companies unlock their value. So he told us that when we formed the company, we invested just 10 lakh rupees. Today, our share capital is 14 crores 30 lakh rupees.
Wow.
So this understanding of unlocking the value of your MSME, the idea was given by him. So if such a value can be unlocked, and the main thing is that we don't have to return this money. We raised somewhere about 23 crores, and whether our stock price goes up or goes down, we are not liable to return this money, and this is what MSMEs actually need. We were at a turnover of 10 to 15 crores. Today we are reaching 70-75 crores. This was only possible because of the capital that was given to us at the right moment, at the right time.
How much time period?
So we filed our DRHP in February 2018, got listed, and from 2018 to 2022 now, the growth has gone from 15 crores to 75 crores. We have also started to make our presence globally as well. We are entering into projects of World Bank, Asian Development Bank also, and this is only possible because of the SME listing under the leadership and guidance of Shri Ajay Thakur.
And you are a services company.
Yes, we are a service-based company, and since we have no assets, so bankers always have some restrictions in providing us loan, and you need the collateral to be given. Our main outflow is bank guarantees, because if you have to back that work, you need to submit a performance security deposit before you start the work. So SME platform did help us raise those funds and bag large amount of works in a year, which helped us increase our turnover. Today, I'm proud to say that we are working on expressway projects also.
Fantastic.
Yeah.
So Saurabhji, you are a services company, and you are maybe slightly smaller than her size. What kind of hope it gives you? What do you think should be done?
Yeah, I think this gives us a lot of hope, because after hearing Tanvi ji and Ajay ji also, who has been talking about the listing part, but as I said, that we did not have so much of an idea about all the stuff. Still, we don't have. Probably I will read more about it and contact people to understand how to get listed. But I think for the companies like us, which are service-based companies, which do not have a lot of assets, this is the best way to go forward, because I don't think we have tried all the options during the COVID period, but we have seen that it doesn't help. And the costs are continuously rising. You will need capital to play, because you are fighting with all the big players who are flushed with funds. So the only way to play is to raise the capital. And I see that listing is one of the best ways, so that you don't get the debt and you raise the capital. So I am hopeful that the institutions from the government, SEBI and other people, they can actually come up with some advertisements about all this, because we see a lot of advertisements on retail investing and people getting private equity funds and all that stuff, but we do not see any kind of marketing wherein asking this kind of corporates like us, who are net cash positive, who are profitable from inception, but they need capital, that you come and list here. So hopefully, for me, through this forum, I'm able to reach out to the right people, but hopefully the other companies like us, they can actually put in their views so that they learn from this forum, and hopefully SEBI and the platform, they will come up with the proper marketing practices, with webinars or something, so that companies like us can actually learn and get listed.
Yeah, great. So coming back to you, Ajay, who are the kind of people who invest in SME companies like Tanvi's company? Are they institutional investors? Are they mutual funds? Are they consumers, retail investors? Who does that?
See, most of the time the investors are HNI, QIB, and retail investors. So these are the three category of investors which are investing in the small and medium entrepreneurs, which are coming for listing. And if you see the bucket, we have the company having a turnover as low as 5 crores to 600 crores. Now, every time I'm seeing, people talking about lakh, 2 lakh, 5 lakh rupees. That's sum of money people are talking about. And many of the time people are saying that we are not aware about the SME listing, SME platform and all those things. Frankly speaking, we keep on talking. You have seen me talking on various platforms. My colleagues are talking on various platforms. Most of the time newspapers are covering about, equity funding and SME platform. And I don't know, so many places it is being covered. The major problem
Maybe
in our
you need
country,
to have SKOCH do it for you.
Yeah. See, the major problem, let me tell you, and let me tell you, I'm just giving you an example. After meeting 36,200 promoters, now these 36,000 promoters, each promoter I have given 2 hours, okay, explaining them each and everything about the listing and the benefits of listing. And out of that, only 400 promoters came out, 450 promoters came forward for listing. Now, just understand, the compliance has been made such, fearful in our country, and people are so scared of compliance, and they think that it's a big thing to do that they never do. A small and a little bit of compliances are required everywhere. Yes, compliance cannot be, very cumbersome. Yes, it needs to be simple. But most of the times, let me tell you, if you start, it's a one-time process. Okay. And you can do the compliance. It's not difficult. I have seen the company having turnover of 5 crore coming for listing. And after 2 years, when they reach the turnover of 25 crores, they have migrated to the main board of the stock exchange. So it means that they have moved from lighter compliance regime to a stricter compliance regime with no difficulty. So I don't understand why the financial consultant and advisors are discouraging about making these compliance issues so big.
I'll tell you.
Till now, I have not been able to understand. Let me tell you the first thing. Though I may sound, something different.
I'll interrupt you for a minute. Kamya, you wanted to say something?
Yeah, no, I just wanted to say I fully agree with Mr. Ajay Thakur. And here is actually a place where the government has a very prominent role, right? So now you can say, look, access to credit is somewhere it is a banking and NBFC sector problem, right? Where the government can play something of a role. But the area of compliances and sort of the processes and regulatory burden that's created on MSMEs is most certainly something that the government really, really needs to review, especially at a state level, right? And there are two things that different government entities need to look at. One is a regulatory guillotine, because most of the rules, right, that have been formed around MSME compliances or business compliances have been done in the Cold War era, right? And most of these rules are irrelevant to a lot of the technology that exists, right? The micromanagement. So there needs to be a straight up regulatory guillotine that takes place, an exercise that's set up state by state, where there's coherence on the regulatory framework and only what's useful remains, right, rather than an overhang of regulations. But second, the government needs to also make it easy to fulfill those compliances, right, and separate from the norms. And here, this is where it's important to say that their identifiers that they give back, like GST or PAN or Udhyam, right? These need to be 100% digitally signed. They need to be available via APIs, right? They need to be usable, in other words, and consumable by digital systems, so that these compliances don't involve MSMEs running from office to office, department to department for meetings to sort of understand even what the rules are and fulfilling them. So I think on both levels here, this is a place where it's very, very critical for the government to actually take a very strong view of what it will take to actually create economic growth in your 5 trillion Atmanirbhar economy. And honestly, rather than any scheme or any other thing that the government can do, holding back the MSMEs based on these compliances, whether it's in access to equity, whether it's for any day-to-day business operation, will really be critical to allowing their growth and allowing them to just free their mind and time and focus on productive business activities rather than these.
Then there are two aspects to this. One is, what are the real compliance issues like you talked about, and then the second, of course, is the phobia of compliance. Like the Udyog Adhar, etc., could be a one-time exercise. So once you're done with it, done with it. I waste 15
but
days
once it's done, it needs to be given back to the businesses, right? So, for example, today I cannot access a digitally signed Udyam certificate via an API. Why? It should be used as a KYC document. It's a valid KYC document. But if a bank wants to create an app that will allow me to remotely, presencelessly, apply for a loan and fulfill a KYC, RBI has a guideline that says even for sole proprietors, you cannot just do an Aadhaar eKYC and get away. The moment you are a business, you have to prove that you are a business, and there are no digital documents to prove that you are a business. Even your GST certificate, is available as downloadable PDF, and it can be tampered with. So you need to issue documents in a form where they can fulfill the compliance requirements, right? And this is something that's not even a difficult thing to do, right? It will take any IT vendor maybe a few weeks, right? It's not a huge budget exercise. It's just a matter of attention and care and consistency across a few departments, the IT department, the GST department, as well as the MSME ministry. So it really should.
Kamya, who will bell that cat? They'll never come together and come to a common plan.
They don't need to come together. They don't need to come together. Each of them independently just need to take the call, and it's in their interest. If Udyam is more usable as a credential and has wider usage, the registration numbers go up and that department looks good. So it's a no-brainer win-win for everyone to make these documents.
Ajay, what she's saying is that if the compliances were more digital and digitally usable, maybe some of this phobia will go away. But some of the phobia possibly.
There are two ways to look into the things. Okay, of course, with the time, a lot of things have been simplified, and simplification is not one-time process. It has to be continuous process. Okay, so many of the things have been simplified. There has been a lot done on ease of doing business. Interest rate is we are in a very soft interest rate regime. So there are so many positive aspects to it, and we keep on improving the system. Now, Udyam registration has not so much direct link to the debt funding and all those things. You can get the debt funding without having Udyam registration. Udyam registration has been provided, or if you get Udyam registration, you'll get some benefits. Say, for example, in the tender process, or on the interest rate, you will get some sort of subsidy. So there are 7-8 benefits, small benefits are available, but it is no way connected to the bank funding. So let us not interlink it.
Correct.
But what will happen that when everything is properly digital and where it is very simple to use, I think more people will be motivated to get themselves registered so that they can avail those small benefits. But let me tell you, when we are seeing a larger picture where micro industries should go to the small and small to the medium and medium to larger, then there are many other things that you have to put in the company. As an entrepreneur, as a promoter, let me tell you, from the promoter side, there is always a tendency, because I've met a lot of promoters, lot of businessmen, especially in the macro, small and medium enterprises. They are more inclined to business. They only think in terms of business, but they never think in terms of compliances. I have seen even 100 crore, 200 crore turnover company have not done the provident fund things properly. Okay, the employees have not been paid as per the statutory process. So those things are missing, and this is because they have never taken the compliances seriously. So the promoters also need to understand that they have to do the compliance. From the banking side, from the banks, and from the NBFC side, see, they have also issues. They have also got the problems. I've seen that when they distribute loans and money and everything is well and good, nobody gives them credit. But if one loan goes wrong, they are being targeted by vigilance, ED, and so many regulatory authorities. And because of which they avoid taking decisions. So we need to take all these things into perspective. The promoters, the entrepreneurs should give the comfort level to the banks, the other financial institutions, so that they can give loan. They should do the proper compliances so that there is a transparency in the company, so that equity investors should give funding. Till the time the promoters keep on thinking in terms of 4 lakh, 5 lakh, or 6 lakh rupee and avoid compliances and other process, let me tell you with guarantee that those companies can never grow. I have seen the promoters, those promoters who have, put the efforts in this direction and invested 10, 12 lakh rupees, invested in the people, because now they're doing the compliances have become much cost effective. Those companies have only grown. So we need to take all those things into consideration, and then you will see the real growth of macro, small and medium enterprise. Yes, this type of disruptions, what we have seen in the pandemic, I think there the banks have also taken a liberal view. They have not defaulted MSME. They have done one-time restructuring. I think there are a lot more things to do. We need to create a pressure group on the regulatory agencies so that they can do the betterment for these companies. For example, just now what Saurabh has said, that okay, we'll talk to Ajay-ji, but still I will do my research. Let me tell you, not a single promoter understands the equity market well. They understand from us, and again they ask 50 other people, and then they come to no conclusion, and they never move forward. So I think the promoters need to take bold decisions also. There is a lack of taking decisions. Unless until promoters start taking decisions in a right way, I think nothing will move forward.
I've got three submissions
so
here.
that needs a lot of confidence building, hand holding, and capacity building, which costs money, and which has to go to intermediaries such as us. Anyway, so Dipali, you were saying something.
That shameless plug, aside from your shameless plug, I just wanted to say that yes, I do agree with Kamya that the rules are Byzantine and several of them should be dispensed with. I also agree that if you are, kind of born small, you like to remain small and you don't want to grow to medium. And this is a feature which you see only with the Indian MSMEs. And this happens because of this fear of the compliances. And for that, a lot of employment is generated. I mean, somebody told me that, look, I have these 5 guys working for me. I have a company secretary. I have a chap who deals with direct taxes, one who deals with indirect taxes, one who tries to understand GST, and one for the sales tax office. So I said, why the hell do you have so many guys? He said, because if I fall short even on item B of point C of Q386 of regulation 5, I can go to jail, because some of these compliances are linked to jail terms. Criminal. And nobody wants that. And therefore, they prefer to remain small rather than to grow. Earlier, we used to talk a lot of the backwardness trap, that because there is a subsidy, you want to lean on the subsidy and you do not want to grow. Now it is just a fear of Byzantine compliances. And if we are to grow to a 5 trillion economy, this is the first thing which we should dispense with. And I think, Kamya, you must make a very strong recommendation for this. And as for the banks, of course, what you said, Ashokji, was music to my ears, because the bankers are scared of the 3 C's. They're scared of the courts, they're scared of the CBI, they're scared of the CVC, and most of all, they're scared of the fact that if they lend and the lending goes bad, the RBI will insist anyway that this money is going to be stuck because, buddy, you have to provision for it.
Absolutely.
And there's no way out of the NPA.
Absolutely.
And if there are too many NPAs, sorry, forget about promotions for the rest of your life. So that is how, sadly, it goes. So that's all. Thanks, Samir Bhai, for your indulgence. And yes, please note that item 6 give business to Scotch also. I'm part of it.
Fair enough. So we had one good ray of hope, which was, Tanvi's story. Kamya, do you have a similar ray of hope? I believe you guys have done something fantastic with GEM here.
Yeah. So one sort of ray of hope, I think, is, I wish I could show you the video here, but we had an MSME, a month and a half ago, who told us he's a GEM supplier. And he received
what is GEM? Most people would not know what is GEM.
Oh, sorry. Yeah, GEM is the government e-marketplace. So it's essentially a procurement commerce website where different government departments are the buyers. And so therefore the money flow of the MSME seller is quite guaranteed, right? Because it's just a matter of time. Of course, it might get delayed, but the payment comes from the department. The story is sort of this man, Dhruv Traders. He's was based in Surat. He received a 6,000 rupee loan for a 58-day period. He picked up his phone. He went through the application entirely from application to disbursement, not sanction, not pre-approval pending physical visit, from initial application to disbursement for a small ticket loan of 6,000 rupees. And over 2,000 such loans have been given out so far. And we get testimonial videos from these MSMEs saying things like, Corona ke mushkil time mein hame ye magic or miracle jaisa laga, right? And for us, honestly, the ray of hope here is that today, at least you have digital footprints that are being generated by smaller and smaller and smaller MSMEs. So your neighborhood restaurant shop, which might not have had any digital footprints, might today be on Swiggy or Zomato or be, have evidence of its cash flows in some entity. And rather than requesting, that Swiggy or that Zomato to become an NBFC and start lending based on those cash flows, there's a new system now in place called the Open Credit Enablement Network, OCEN, which basically is just a standard plug. Think about it as a standard plug that different banks are adopting, which will allow them to plug into a second party that might have information on a cash flow. So in this case, GEM is one of those parties, right? And GEM says to the multiple lenders in real time, it says, hey, by the way, there's this cash flow. The individual, MSME wants a loan against it. Please return an offer in real time based on this cash flow, right? And that response comes in real time. The offer is accepted in real time, and the disbursement is made in real time for a loan as small as rupees 150 of a stationary supplier in Rajasthan, right? So I think the ray of hope sort of is that OCEN is now being adopted. The largest private bank in the country, ICICI, has adopted OCEN and gone live on it. About 5 other institutions, including Kotak and other NBFCs, are in the process of adopting. Kotak was supposed to go live today. I think they'll go live end of the week. And as we see more and more lenders joining an integrated network, right? That where nobody, there's no owner, so there's no monopoly sort of risk. It's sort of, it can't be switched off by some international party the way, the US wakes up tomorrow and wants to turn off SWIFT for us, right? This is an Indian-born protocol, which is very powerful in that it can allow the entities who have information on future cash flows of MSMEs to interact directly with banks and at the intent of the MSME sort of access a loan in real time. And it's built based on this powerful digital infrastructure of RBI account aggregator as well as the Open Credit Enablement Network. So both of these two things, I think in tandem, we can see some hope of increasing our sort of formal credit loan book nationally, which is at about 18 lakh crore for MSMEs. We're hoping this can push up the national loan book, the formal loan book, to about 20-25 lakh crore, at least in the next 2-3 years, right? As more and more banks sort of adopt. But again, here the protocols are available. It's now on the lenders to sort of, put their best minds behind it. And it's a simple enough integration, right? But once you join that network, the power, it's a win-win. So really hoping that this picks up just the way UPI picked up, to solve payments for the small merchant. We really hope that small ticket lending at least can be solved. Of course, it won't address the big problem of, large capital of equity, for example, which can be solved by equity or larger size loans. But at least, those working capital requirements might be dealt with in a better way.
Thank you so much, Kamya. We have about 15 minutes on the clock and we come to the recommendation round. So you have 2 minutes each, starting with Dipali ji.
Samir, just one thing, let me tell you, our SME stock exchange, we have seen the promoters raising as small as 2 crore rupees. So I think that, SME promoters, even having a turnover of 5 crore, 10 crore, 20 crore, 25 crore, they can approach to the SME stock exchange and raise funds. So there is no limit. Okay, you can raise as low as 2 crore, you can raise as high as 100 crore or 200 crore from this SME platform. Now, second thing, before you go, as far as recommend, okay, I will talk this thing in the recommendation. No, please.
Right, but just to, so you basically, essentially have hit the nail on the head. You have an intermediary problem. SME exchange, you yourself can't reach everywhere. You need good intermediaries. And I'll tell you the example. One of the guys came, SKOCH is now 25, 30 years old, never defaulted on a single credit, huge brand value. Out of 20 years, maybe 1 year loss, that justifiable loss, and mostly profitable, right? And this intermediary tells me what is the exit option for investors. So, you are
I think
you are making this work of art, and you've got so much of intellectual property, and it can be all unlocked. But what is the exit option for the investors?
No,
So
but
that's
boss. Don't worry on that aspect. I am there. If you have any issue, you come across people, who can talk different things, and they ask about exit options and all those things. But having said that, they can only tell you about or ask you about all these things. Trying to understand what are the various options that are available.
One of my recommendations is, let me get that round going, is why don't you make a mentor board of people who have already gone to SME, like Tanvi. You have 400 companies.
Yeah, of course.
Why don't each company mentor 10 more? 4,000 to aapke वैसे ही हो गए ना. So Tanvi, you are mentoring me and you are mentoring Saurabh.
Yeah.
Rather than talking to Ajay, we'll talk to you. कि आप बताओ, आप services industry हो, हम लोग क्या करें?
नहीं, और मैं ये भी चाहूंगा कि we have already signed MOU with various state government and the professional institution to spread the awareness about this exchange. We will love to have MOU with you also.
We would love to do that. You can do that with SKOCH Development Foundation.
So we can go forward with various MOUs and try to reach each corner of the country.
Absolutely wonderful. So Dipali ji.
Yeah, so segueing from what Kamya said, cash flow based lending as an alternative to collateralized lending, income and expenditure assessments based on the regularity of cash flows, account books, and digitization of credit histories, and the important role of rating agencies, GST returns to be treated as a multiplier of debt, responsive lending and responsible repayment, the two to be seen as both sides of the coin, and you will realize that the banks have not done that bad a job. But what the banks have to do is naturally to get rid of the Byzantine laws, to simplify processes, to eliminate or at least reduce paperwork. For the industry associations, my ask is to take the lead to graduate borrowers to be able to avail of credit from NBFCs and banks, increase awareness and financial literacy. I talked about the 5 crore as the unreached middle, which is still in a muddle, so that you view it as a part of the supply chain. I mean, even if you go to a panwala's shop, you will find a sachet of Liril which comes from Hindustan Lever, and you will find cigarettes which come from ITC. So if you look at him as just as a distributor and then see his cash flows and give him loan, well, you can certainly give him proper lines of credit. Other than that, infrastructure naturally needs to be improved. You had the Jan Dhan Aadhaar mobile, you have the UPI now. You need to increase subsidies for the rate of IT adoption and for beefing up logistics and marketing support. There's a lot of obsolete technology. That obsolete technology hampers your productivity and your efficiency. You have to be more generous with your working capital loans and your interest rate subsidy, hand-holding by the regulator, and the regulator has to constantly not only handhold, but support and give an assurance of easy access to cheap credit to tide over the kind of issues which are arising from Russia, Ukraine, from global situations, from markets in a downturn, from pandemics. And you should consider a tax holiday. Because you see, for a long time, we were very complacent that the services sector is the sector. And we have leapfrogged over manufacturing. That has not happened. After agriculture, manufacturing still employs the major number of people. And if you have to accelerate your growth, you need your micro, small, and medium, all of which feed one into the other. So that's my 2 bits. Thank you.
Thank you so much. Rohit ji, your 2 minutes.
Yes, I think many good points has already been discussed. I would now rather say these things will keep on going. We are moving towards, a good economy or, better development. Required is the more awareness. Awareness is very lacking. Reaching the associations, meeting out regularly. The user interface should be easy. Reaching out consultants, media, and there should be campaign for awareness across the MSME for utilizing the schemes or the available resources for the MSMEs. More hand holding is required, and because it's a very large country, and if we talk about the MSME, that is also a very large segment which we are talking about. From micro, small and medium, we are talking about the medium enterprises also who can afford many of the things which we were discussing. Then capacity building, which is already happening, is more required, and this is a part of the exercise. And we need to trust the MSME. And if the trust is built up, and if collateral-free funding is available to the MSME based on certain criteria like which we have discussed here, you will see the results. And I don't think the NPA will disturb the trust in these types of fundings. And these are the things which I think will repose the confidence in the MSME and ease out the issues. And apart from the compliances part, the cost of compliance is also to be looked into. And it is not only that the compliances are being done. Even a small company needs to comply with the N number of laws. I don't want to repeat it here, including labor laws and maintenance of minute books and MCA compliance and GST and IT and so on. And it involves cost very heavily. We need to look at it, we need to revisit it, and we need to find out more ways. And if there is voices coming regarding that, we should accept it also. Thank you.
Tanvi, your 2 minutes.
Yes, so I have 3 recommendations, one of which was already covered by Mr. Rohit. One is collateral-free lending. We have seen that under the GECL, government has given us GECL loan during COVID time. But if that can be extended all year long, so or for MSMEs especially, it would be very beneficial to them. Second is, as I told, about bank guarantees. Certain policies which are framed at central government level, they need to be implemented at state level, and under the MSME Act, whatever provisions are there. So bank guarantee exemption must be done for MSMEs. Third is technology-based lending. So whichever MSME is coming up with a new technology, banks see it as a risk. So if some sort of technology-based lending can be done, like something like Make in India, and that can help MSMEs bring in new technology and grow at a rapid pace. That's all from my side.
Thank you. Saurav, what would you say?
Yeah. So I have only 2. One is that what Tanviji already said about collateral-free lending. So that is something we have not found it happening. So hopefully that can be improved in certain way for the service-based companies who are assetless. And second thing is that what Mr. Thakur has been talking of, but I have been unfortunate. You can say that I have not known about all this stuff about IPOs for the SMEs, about how do you handle or probably do certain advertisements or through digital media. So I've not seen too much of digital media action wherein people are reaching out to us. So I am thankful through SKOCH that I'm able to know Mr. Thakur, and I can find out about how to go ahead with the listing. But everybody will not be having that kind of option. So if you can do better marketing or through SKOCH, as we were talking of, to reach out to more people across India about how you can handhold them for getting these companies listed. Thank you.
Kamil?
Yeah, I guess I'll break this up by sort of industry and government, right? So in industry, in the banking industry and for NBFCs, I think more quick adoption of digital platforms and infrastructure like account aggregator and the Open Credit Enablement Network APIs. These infrastructure switches will be the key to actually make collateral-free, cash flow-based lending possible. For the MSMEs on this call. There's nothing actually that an MSME here can do. It's on the sort of financial institutions to be as quick as possible. In the case of UPI, it was actually the whip of demonetization and the sudden loss of cash that made them quickly adopt sort of the UPI platform. We don't want to have to wait for another horrible event like that, to actually push for this adoption. They need to sort of accelerate the adoption of those platforms. So I think on the industry side, that would be the main ask. On the government side, I think it's more on the lines of ease your compliances and make it easy for MSMEs to fulfill those compliances. And I think that breaks down in two parts. One is at a central level, they sort of have to form a war room national level that actually reviews and compares state by state, because we know no state likes to be compared to another, that can actually compare the progress of the level of compliances required and the review of compliances. And this will take, I think it'll take them a 3-4 month exercise to actually catalog what exists. But in that process, they will learn so much and hopefully will see a bit of what the MSMEs have been through, and sort of rejig the entire regulatory sort of framework and throw out the old rules, right? Because I honestly think that if you give MSMEs freedom to operate and access to money, that we have some of the best entrepreneurs in the world, and we'll solve for our own problems. But we need to be given those enablers.
Thank you so much. We are on the last 2 minutes, and those 2 minutes belong to Ajay.
Yeah, but in fact, we all know SMEs are the backbone of Indian economy. There should be ease of doing business. I think, both the SMEs, government and the financial institutions like us have to move forward to ensure that, small and medium enterprises should keep on growing. Of course, we all need to do a lot of hand-holding for a small and medium enterprises. A lot of awareness needs to be done. And there, capital requirements should be made, especially the working capital requirement. The new platforms that have been launched by Government of India, they are wonderful platforms like Trades, Samadhan and GEM Portal. But they need to be moving fast. And, they should be addressing the requirements of macro, small and medium enterprises. On Trades platform, we have seen that only 25% of the transactions of the company having turnover of 500 crores or more is being executed, which is not good at all. If it can move to almost 75% of the business, I think a lot of funding requirements of macro, small and medium enterprises will be met. Second is Samadhan. Now 80,000 cases are pending on Samadhan. Out of that, only 20% have been taken care of. The rest has not been still taken care of. And then again, this is a big legal hurdle that is coming in the resolution of dispute that needs to be looked after by the government. And the third thing, where I want, the government to work upon is that, the 45 days period, which has been mentioned under MSME Act, it is still not quite clear that from which date that 45 days is applicable. I think that definition needs to be clear. I think if these actions will be taken off in a short-term basis, a lot of problems of the MSMEs can be taken care of. From the MSME side, they need to be alert. They should not always expect all the stakeholders from the government and financial institution to keep on coming to their door. They should also come out of their office to understand what are the schemes, what are the options for funding are available. Many of times, there are a lot of funding options are available, but SME promoters never go and try to access to those funds. Besides that, they have also the fear of compliances, though they are easy compliances. They have to come out of that fear psychosis. Unless until they come out of their fear psychosis, they can't grow their business. One thing they must need to understand, 30 years back, the compliances were much more rigorous. It's not that much rigorous today. It is much more transparent. You have many institutions through which you can get all those data. But 30 years back or 40 years back, Reliance was a small company. Infosys was a macro company. Wipro was a small company. But all those companies have become very big. So, you can have odds which can't be favoring you, but still you have the wage and means to grow yourself bigger and bigger. So look positive. And as far as we are concerned, we are there to give you red carpet welcome. We are there to handhold you. We are there to see you and make you great. So with these words, thanks a lot. Samirji, I am there for all of you. Thank you.
Namaskar. Thank you everyone for this very enriching discussion and solid recommendations. And look at your watch. We started at 2 minutes past 3. It's 4:32. 90 minutes precise. That's what happens when I anchor. Thank you.